All right, so let's jump into it today. We're going to be looking at Megacap growth ETFs,
Good.
specifically the Vanguard Megacap growth ETF.
Right.
MGK,
NGK, yeah.
that Motley Fool article that we read, I think it was pretty interesting, especially since everybody's trying to figure out how to, ride this bull market.
Right.
And tap into all this potential with tech and AI.
Yeah, definitely a hot topic.
Yeah, it is. The article mentions that the S&P 500 and MGK, they've been doing really well. The S&P 500 is up 23% in the past, 10 and a half months?
Wow.
But MGK is on track for a 27% increase for 2024.
Wow, that's great.
And get this, over the long haul, MGK is up 300% over the past 10 years.
Really?
And the S&P gained 187%. So it's a pretty big difference.
Yeah, it is. And, the article even mentions that those growth stocks, like the ones in MGK, they tend to do really well in bull markets.
Sure.
Companies focused on growth. They're all about, invest in heavily in innovation expansion. They want to capture that market share and a strong market that gives them the ideal conditions to thrive.
So you're saying that if somebody's looking to capitalize on this current bull market, MGK with its focus on growth stocks could be a smart way to go.
Yeah, it's definitely worth considering.
And one of the things I really like about ETFs in general is that they offer like a simplified approach to invest in,
Yeah.
You get that diversified exposure to a whole basket of stocks that are all aligned with a specific theme like growth in this case, without having to pick and choose individual companies.
It's like built-in expertise.
Exactly, and they're designed to track a particular index or sector.
Right.
Speaking of which, MGK follows the CRSP US Megacap Growth Index,
Okay.
which means it's always aiming to hold those top-performing growth stocks.
Oh.
Plus, most ETFs have these super reasonable management fees called expense ratios,
Yeah.
and you want to look for ones under 1% ideally to maximize your returns, and MGK shines here.
Oh, absolutely. Fees can really eat into your profits over time. So a low expense ratio, that's essential.
MGK has an expense ratio of just 0.07%, and you can snag a share for around $330.
Wow.
Not bad for a piece of that potential growth pie.
That's pretty good.
Right, and here's the thing about MGK. While it's heavily weighted towards technology right now, about 61% according to the article,
Okay.
it's designed to adapt as the market changes.
Oh, wow.
So even if tech's dominance fades in the future, MGK is not going to be stuck in the past. It's designed to keep evolving and capturing growth wherever it emerges.
Wow. So it's like having a built-in safeguard against market shifts. You're not betting on a single sector. You're betting on growth itself.
That's really interesting.
Yeah.
Now, the article does point out that MGK's top three holdings are currently the tech titans we all know.
Right.
Apple, Nvidia, and Microsoft, they each make up over 12% of the ETF, which makes sense given all the buzz around AI and their influence in the tech world.
Yeah.
But you mentioned that MGK isn't just a tech play.
Right. One of the things that struck me about the article was this. Despite the current focus on tech, MGK actually includes stocks from 10 different industries. So you're not just riding the tech wave, you're getting a slice of various growth sectors.
Okay, so how does this diversification actually play out in MGK's holdings? I mean, what are some other major players in there besides those big tech names?
Well, the article mentions a couple other heavy hitters like Eli Lilly, the pharmaceutical giant,
Oh, yeah.
and Tesla, the electric vehicle powerhouse. Those are pretty different sectors than the Apples and Nvidias of the world.
Okay, that makes sense. So even though tech is a big piece of the pie right now, MGK's got this built-in diversification that spreads the risk and taps into multiple growth avenues. And if I'm remembering correctly, Eli Lilly has been making some big moves in the diabetes and Alzheimer's treatment spaces, right?
Exactly. And Tesla, well, they're pretty much leading the charge when it comes to electric vehicles and sustainable energy.
So essentially what you're saying is that MGK offers a way for investors to potentially benefit from the growth we're seeing in this bull market, particularly in those exciting sectors like tech, but it's not a one-trick pony. It's got this diversified approach that could be a smart way to manage risk.
I think that's a great way to put it. It's like a diversified growth portfolio all bundled into a single ETF. You're not betting on one horse. You're betting on a whole stable of potential winners.
That's a really helpful analogy. It makes the whole concept much easier to grasp. Now, the article obviously paints a pretty positive picture of MGK, but, no investment is completely without risk. And even with this diversification, things could shift, right?
Absolutely. Past performance is never a guarantee of future results. While diversification does help mitigate risk, it doesn't eliminate it entirely, and markets can be unpredictable.
So what are some things that could potentially throw MGK off course even with its diversified approach?
Well, one thing that comes to mind is the potential for a market downturn. Even the best performing growth stocks can take a hit during a bear market. And remember, MGK is heavily invested in large cap companies, and those can be particularly vulnerable during economic slowdowns.
I see what you mean. So even though the long-term track record is strong, there's always that element of risk, especially if the market takes a turn.
Exactly. And another thing to consider is the ever-changing nature of technology.
Yeah.
The article focuses heavily on the current dominance of AI, but who knows what the next big tech innovation will be. It's entirely possible that something completely unexpected could come along and disrupt the entire landscape.
Okay, that's an interesting thought. So even though MGK is designed to adapt, those shifts could still impact its performance, especially if they happen quickly or unexpectedly.
Precisely. Now, I don't want to sound overly cautious here. MGK has a lot going for it, and the potential for growth is definitely there, but it's important to be aware of the potential downsides as well.
Absolutely. We always want to make sure our listeners have a well-rounded perspective. And it sounds like with MGK, there's a lot to consider. You've got this potential for growth, especially with the current focus on tech and AI, but there are also some inherent risks, just like with any investment. But, one thing that keeps popping up in this article is the whole AI revolution. And it makes me wonder, will this trend continue?
That's a great question. The tech sector is obviously a major force right now, and AI is a hot topic. But what does the future hold? Will tech continue to dominate that growth landscape, or are there other emerging industries poised to take center stage? It's hard to say for certain. The investment landscape is always evolving, and what's hot today might not be the leader tomorrow.
It's like trying to predict the weather.
Exactly. But, while the article focuses heavily on tech and AI, it does mention that MGK includes companies from 10 different industries. So even within this ETF, there's an acknowledgement that growth can come from different areas.
Okay, so even if that tech landscape shifts dramatically, MGK is positioned to adapt and capture growth wherever it pops up?
That's the idea. It's designed to evolve with the market. So you're not putting all your eggs in one basket, even within the growth sector.
So for someone like me who's interested in tapping into this growth potential, but maybe a little hesitant to go all in on tech, MGK seems like a good option to consider.
I think so. It offers that balance between exposure to the current tech boom and diversification across other industries.
Now, you mentioned earlier that it's essential to keep an eye on other sectors that are showing signs of innovation and growth. What are some areas that you're personally watching?
Well, two fields that come to mind are biotechnology and renewable energy. Both are experiencing tremendous growth and innovation, and they have the potential to challenge tech's dominance in the coming years.
Biotech and renewable energy, those are definitely sectors I'm hearing more and more about what makes them so promising from an investment perspective.
Well, in biotech, you have groundbreaking advancements in gene editing, personalized medicine, and even things like lab-grown meat. It's a field with the potential to revolutionize healthcare and even how we produce food.
Wow, that's pretty mind-blowing stuff. And what about renewable energy?
Well, with the growing concerns about climate change and the push for sustainable solutions, the renewable energy sector is poised for explosive growth. We're talking about things like solar power, wind power, and even advancements in battery technology.
It sounds like these sectors are on the verge of some major breakthroughs. So even though the article focuses on MGK and its current tech-heavy composition, it's important to remember that the growth landscape is dynamic and other industries are vying for the spotlight.
Exactly. And for someone who is considering investing in MGK, it might be worth exploring these other sectors as well, either through additional ETFs or individual stock picks just to diversify even further.
That's a fantastic point. So as we wrap up our deep dive into MGK, I think the key takeaway for our listeners is this. While MGK offers a compelling way to tap into the potential of growth stocks, it's just one piece of the puzzle. The investment landscape is constantly changing, and staying informed about different sectors and emerging trends is crucial for making informed decisions.
I couldn't agree more. And, it's not just about chasing the next big thing. It's about understanding your own investment goals, your risk tolerance, and having a well-rounded portfolio that aligns with your long-term financial vision.
Well said. Knowledge is power, especially when it comes to navigating the world of investing. So keep learning, keep exploring, and as always, happy investing.